Fast Market here on the Schwab Network. It's time for cash tags. For that, let's bring in our next guest. It's going to be Landon Swan. He's a co-founder at Likefolio. Welcome back to the show, Landon.
Thanks, Tom. Happy Monday.
Happy Monday to you. We're talking Lowe's. Now, you know, Home Depot earnings came out last week. They weren't anything to write home about, but the bar was pretty low going into that. Lowe's got a pop on it, but it's been consolidating. I mean, what kind of data do you guys have? Because it seems like this is like the little nephew for Home Depot, and maybe it's not as good as Home Depot.
Right. I like that analogy. I mean, when you look at what happened with Home Depot, I mean, they reported, I think it was the 13th before the market, that the stock's up about 5% since then. The market in general is up 4% since then. Lowe's moved up almost as much since then. I think they're 4.7%. So everything's just kind of elevated ever since then. And I'm not saying that Home Depot kicked it off. Obviously, the markets, you know, they're rising for other reasons. But it's just interesting to see that everything's been pulling up higher. And so now you've got Lowe's reporting on the heels of a kind of a soft report by Home Depot. I mean, they warned about further weakening in sales in the future, and yet the stock was up with the market. And now Lowe's is kind of trading at the top of a maybe 5 or 6 week channel if you look at that. So I think it's slightly elevated, and I do think that there's room to the downside here for Lowe's, especially when you look at some of the data. So first of all, their happiness is just slightly weaker than Home Depot's. It's at 66 versus 68. Not a huge disparity. This bar chart makes it look like it's a big difference, but it's only 2 points. But that's different than what it's been in the past. This has always been Lowe's to Home Depot has always kind of been Target to Walmart, and Lowe's and Target have always had the higher happiness between versus their counterparties, and now it's kind of reversing, which is, it's unusual, and it's interesting to see that Lowe's is kind of giving away that happiness lead. So I don't like to see that as a potential investor. And then of course you look at all the things that have happened last time. I mean, the revenue was down 4.5% year over year. They had fewer transactions, fewer big ticket purchases, and their web traffic is down significantly. It's just continuing to slide. And you can see this, it's about 11 points over the last year, negative 11%. And you can see there's a lot of volatility in here in that solid line, but the dotted line shows you the year over year change. And now we're in that negative 11% territory. So that's obviously not good. So the less people that are talking about it on social media, there are fewer people going to the website. They're slightly less happy. Expectations, I think that's key though, right? I mean, you've got kind of lower expectations. Everyone is expecting them to come in and have, I think it's -4 on the year over year again this quarter. And after Home Depot was kind of weak, I do think that expectations are somewhat, they should be low, but the stock is trading as if they're not low. So it's a little confounding, to be honest. But the data that we have is saying this is a little bit overpriced here. And you can see it right at that top of that very short channel, 5 weeks up and down. Generally speaking, if you've got high expectations, you buy the stock so this price is higher. So the fact that the stock is moving with the market, moving with that Home Depot week report up higher, tells me that expectations are actually higher than what is being put out there, than what analysts are saying. And I don't think that they're going to hit those elevated expectations, even though they're elevated off of a low point, if that makes sense. But I don't think they're going to hit them. So we're comfortable playing it to the downside.
Yeah, Landon, today's theme of today's show should be distant number twos, right? AMD in terms of AI, clearly Lowe's and Home Depot. Lowe's is a distant second, even though this is considered a duopoly. And Home Depot just appears to be a better run company, Landon. And Lowe's has had some missteps with inventories that have caused same-store sales to dip. And they got out of Canada, got out of Mexico. They tried the expansion there. It really didn't work. So the fact that it rallied on Home Depot's poor numbers, boy, that's a concerning reason to rally. Because, however, we have to respect a low bar when earnings come out. But, Landon, is the bar still low? You mentioned the bar might be a little higher because if Home Depot's weak, Lowe's is going to be weaker, in my opinion, because they have more do-it-yourself and they have less professional, which should favor Home Depot. So if Home Depot's was weak, Landon, isn't Lowe's going to be worse?
Yes, and that's what I would think. That's why it's a little confusing, honestly. But I'm a big believer in looking at the share price to understand expectations because, just like I said, I mean, it's a free market. You can buy as many shares as you want, and if you're bearish, if you think they're going to do very poorly, you wouldn't be buying shares. You'd be selling shares, and that forces the price down. The fact that they're up 5% since Home Depot's report tells me that either A, it's all just in the market, right? The market's been rising, and they just kind of rose with that tide, or B, people actually think that they're going to beat these really low expectations. And that in and of itself are high expectations. It's unusual, but to assume that a company is going to beat low expectations is actually having sort of high expectations. And I think the price of the shares sort of reflect that. So it's a tough trade. It's not, we've had some slam dunks in the past where we were really confident going in. I wouldn't say this is the case here because it is a little confusing to see how they've been reacting, especially when you throw in the market, right? That's the wild card. It's been rallying like crazy since that yen carry trade fell apart. But now, you just got to kind of try to isolate Lowe's from the rest of this and see what you think it's going to do. I mean, overall, we know that, like I said before, Home Depot warned about weakening consumer. We know that their consumers are holding off on major projects. The housing market being weak is definitely holding back the pro segment. So there's a lot of reasons why I think expectations should be low. And the data for us, again, confirms that the expectations should be low. For me, it's just the fact that this stock is up at the higher levels over the last 5 or 6 weeks. The market's been rallying, and I think that if they do come in where they don't beat these soft expectations, I could see them selling off just a little bit, not a huge amount, but I would expect them to be trading in the mid 230s tomorrow and the next day, somewhere in 235 range. So that's where we're looking at. But this is not the easiest of trades for us, for sure.
Yeah, part of that note is over the last 5 weeks, Landon, this stock's had about a 230 low and about a 250 high on it. So it's been consolidating. So your data basically reflects that, hey, don't expect a big move because the option market's still pricing in about a plus or minus $10, $11 move in the shares.
Yeah, I would be surprised if it got any more than that. Like 230 is kind of 230, 232 would be really low, in my opinion. My expectations are that they come in sort of in line with the low expectations, which is a disappointment because the expectations are actually higher than that. And then they trade around 235, 236. I mean, if I had to put a specific number on it, which you guys know this is very hard to do, but overall, our money's on the downside. The score for like folio is negative 47, which is fairly strong. It's not incredibly strong, but it is, again, it's confounded by all of these external variables with Home Depot and the market both rallying, pulling lows up. Makes you wonder what are the expectations in reality, and I think they're just a little more elevated than analysts are letting on.
Well, I think you nailed this one because I think it's Kevin's example trade kind of sets up for that thought process that you guys have based on the data that you have. So make sure you stick around and listen. Thanks, Landon. Appreciate it.
Thanks, guys.